I've got some good news and I've got some bad news. And whether it's good or bad depends on your plans when it comes to purchasing a home. Due to a recent change, it's going to be harder for some particular home buyers to be able to buy a home and probably more expensive. But for others, it might just be the crack in the door we need to get that inventory problem under control. Recently, there was a provision put in place to limit Fannie Mae and Freddie Mac. You make it harder for people to finance, increased the cost. My name is Scott Wynn, and I am a licensed mortgage advisor with the Wynn and Egan team at Citywide Home Loans. If you want to buy a home in the next 12 months, then click that subscribe button, and together, we'll make it happen. Last week, Fannie Mae and Freddie Mac released news that was pretty much a shock to the mortgage world. But to explain what happened, I've kind of got to rewind a little bit. Right after the housing crash of 2008, the US government swooped in to basically make sure that the housing market didn't collapse. And one of the ways they could do that was to put Fannie Mae and Freddie Mac into conservatorship. That meant that the US government had control over basically the assets that Fannie Mae and Freddie Mac has. They did this through preferred stock purchase agreements. According to the Federal Housing Finance Authority, the SPSAs were designed to ensure that Fannie Mae and Freddie Mac, respectively, provide stability to the financial markets and prevent disruptions in the availability of mortgage financing, along with protecting the taxpayer. Well, part of the preferred stock purchase agreements are certain provisions. Well, recently there was a provision put in place to limit Fannie Mae and Freddie Mac's limit on the number of non-owner occupied and secondary home mortgage products to just 7% of the overall portfolio that they hold. When this provision was added, there was no time frame set as to when this would go into play. Well, that was until last week on March 10th. That's when Fannie Mae and Freddie Mac announced that for all loans being delivered on or after April 1st of 2021, that there would be additional restrictions to ensure that they could comply with the 7% maximum. But it's a bit of a complicated problem to solve. How do you just immediately stop people from financing investment properties and vacation homes? Well, you either increase the price or you make it harder for people to finance investment properties and second homes. And that's exactly what we're starting to see. In Fannie Mae's lender letter that they sent out on March 10th releasing this change, what they announced is that all non-owner occupied properties and second home properties financed through conventional financing now must be approved through automated underwriting. Now, this isn't a huge shift considering most of the loans were probably already going through automated underwriting anyway, but they went on to say, due to our need to comply with these restrictions in the Treasury Agreement, we will be monitoring deliveries of second home and investor loans on a lender level basis, and will be working with lenders that have excess delivery volume of these type of loans. Basically, that makes it very clear that they are going to do everything they can to make sure that they limit the number of second home and investment properties being financed. Individual banks and lenders are doing everything they can to get ahead of this change coming here April 1st. So what have they done? Well, they've basically increased the cost to get a second home or investment property financed. If you appreciate this update, do me a quick favor. Hit that like button so that more people that are looking for this information can find it just like you. So what does all of this mean for you? Well, again, it depends on your particular situation. If you're looking to purchase an investment property or a second home and using mortgage financing to do so, well, it just got a bit more expensive. Your rates will likely be higher, or there will be more fees or a combination thereof. It will also likely be a little bit more challenging to get approved. We fully expect that Fannie Mae and Freddie Mac will be releasing additional restrictions associated with financing those types of properties. But for those of you that are looking to purchase a property that you plan to occupy as your primary residence, well, in a way, this is good news. If you're in the market to buy a home, you've probably come up against low inventory. There's just simply not enough homes to purchase. If it's more challenging for investors or for vacation home buyers to purchase homes, well, that may just free up a little bit more for those that are looking to purchase their primary home. Now, I don't think any of this is going to have a drastic impact on mortgage lending in general or the ability to purchase a home with a low inventory issue. However, it will have an impact in some way, shape, or form. Once Fannie Mae and Freddie Mac releases any additional restrictions expected in April, we'll know a whole lot more. Likely we'll see a slight increase in interest rates or fees associated with investment properties and vacation home properties being financed. And For the primary home buyer, you're probably going to see a slight benefit in terms of the inventory problem we're facing right now.